Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bearish double yesterday after the previous session's bullish piercing line pattern and bullish double. Prices moved closer to the purple lower tie, currently 110.05, of the late June to early August bullish Andrews pitchfork, as well as the bright red, slowly declining head and shoulders neckline extension of the July 2017 to November 2018 move at 109.90. Now, so far today we have a small reactionary move back up, but we're still within yesterday's range. Cable, aka sterling against the US dollar. An immediate countering bearish opening black Mariboso and bearish engulfing pattern yesterday, if only just on the latter. And that's after the previous session's bullish piercing line pattern. Prices once again dipped and closed below both the December 2020 low at 131.33 and the July 2023 high at 131.43. The latter, I suspect, is a derivation of the former. Additionally, the market had a strong close below the dark blue middle tine, currently at 131.55 of the bullish Andrews pitchfork for the late June to early August move. Now below this we are fairly clear until the July high at 130.44. And so far today a small move lower, but nothing right now to write home about, I have to say. Euro sterling. A long-legged indecisive doji cross yesterday, the third consecutive indecisive pattern in a row. That was interestingly also a key reversal up. Support came from the congestion once again at 84.05, dating from August 2022. There is further congestion below from the same time period at 83.86, which was responsible for July's low at 83.81. Overhead, the market was capped by the lower trend line, currently 84.31, of the broken August-based acutely descending wedge pattern. Further up, we have the April 2021 low at 84.70 and a flatlining green short medium moving average. And that's currently at 84.67. So, I previously laid out some potential targets for the move below this August-based descending wedge pattern. The primary target, 84.37, was reached last week, but we still have the secondary hard-to-reach target X1 down at 83.34. Overall, prices have stopped moving lower within this large June to July congestion zone, between roughly the April 2021 low above us at 84.70 all the way down to the 2024 low in July at 83.81, and instead seem to be going sideways to recovering a little higher. This zone is not specifically defined, so if prices do move, well, you may find some places with little or no support and others with a lot. So far today, a test up to the broken lower trend line of the descending wedge pattern, but no more at this time as we pull back away from it. US dollar against the Japanese yen. A key reversal down yesterday as prices dropped back down below the lesser Fibonacci line at 146.69, which it had managed to close over only in the previous session. The fall stopped short of trying down to the 50% Fibonacci line of the January 23 to January 24 move at 144.58, which the market had used as a base last week. Overall, prices are still uncomfortably close to the untested dark blue lower time, currently 143.37 of the December 23 to early August 2024 bullish Andrews pitchfork. Now, I continue to ponder as to whether this market has maybe reached the decision time. My initial thought a few days ago Had been, yes, but now I'm not so sure. So far today, a further follow-on lower towards the 50% Fibonacci line at 144.58, but seemingly shying away from properly testing it at this time. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier yesterday, pushing up over the lesser Fibonacci line at 711.61 and breaching on the top side the upper trend line, currently at 711.42 of the August-based descending wedge pattern. They're only closing over the lesser Fibonacci line and right on that trend line. The breaches on both sides of the descending wedge pattern are now making me wonder if this descending wedge pattern may be becoming a bear channel. I will ponder on this some more. Looking below, we have the lower trend line of the descending wedge pattern, currently at 707.74, and then the recent low at 707.01. That is just ahead of the June 2023 low at 706.57. But in between, not much. Meanwhile, overhead, we have the lesser Fibonacci line at 716.22, but in between, again, not much by what prices have generated this month. So far today, well, a reactionary move lower, below the lesser Fibonacci line at 711.61 and back within the breached descending wedge pattern. That may become a possible bear channel, but we're not really stabilized. We're still playing around with that upper trend line. US dollar against the Mexican peso. A higher but indecisive spinning top yesterday that was also an attempted bearish dark cloud cover pattern after the previous session's counter-to-counter bullish harami. Prices pierced the considerable overhead congestion band between 1987.56 to 1991.31, containing the December 2022 high at 1991.31, but also moved down to support of the April 22 low at 1971.68, before finishing up just under the congestion at 1979.14. Overall, the market is tracking just above the bright red middle tine, currently at 1967.93 of the mid-May to mid-July bullish shift pitchfork. I have also drawn a new dark blue highlighted very acute early July to mid-August bullish Andrews pitchfork to show the very recent bullish angle of attack. Right now, prices are closer to the lower tine there, currently at 1959.84. There is still a question outstanding as to whether the mid-July today action is a bullish halfway hesitation. A new question in my mind whether the congestion we've got overhead around the 1990 area and the support from the two tines, the middle red tine and the lower blue tine, whether they're squishing the market between those two. We have to see on that. So far today, well, not much. We're either side of the congestion at 1979.14 right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.